What's up, YouTube investors? This is Steve from the Stock Market Shark YouTube channel. Guys, today I'm coming with the $1 million question. Can Palantir sink down to 5 USDs? Is a 5 USD price target realistic for Palantir? Guys, for those of you who haven't read it, there has been an article published a couple of days ago. There was one analyst and he published an article, eventually 2 articles on the Seeking Alpha website, saying that the pain for Palantir is not over yet, and even after the devastating losses, there's still a large room for the stock to sink further. And at the end, this analyst set a price target of 5 USDs for the stock. I want to investigate today if this article is a clickbait or what it says is basically supported by real research, it's supported by facts, and there is some reasonable background behind this article, and if this future, this prospect for Palantir can become true. Let's look into it, but before we do so, guys, let's set the context for what's going on in the market and what's going on mainly for the growth stocks this year, because this year, guys, has been a devastating year for the stocks in general and for the growth stocks. All major indices in the United States are massively in the red. Growth stocks are suffering more significantly. And I want to just interpret what's going on. I brought you a quote, and I brought you some basically famous analyst quotes from last year. I think that these put the situation in a very clear context. But before we start, guys, please smash the subscribe button for my channel, just as the growth stocks and stocks in general were smashed. Guys, this is a no hype channel. What we are doing here, we are doing stock analysis, but we are not hyping up stocks. We are not doing clickbait videos. What I'm doing is basically looking for good value stocks, good value picks. I'm analyzing the stocks from a fundamental and both from the technical perspective, putting together an overwhelming holistic picture of the stocks and trying to find you guys some good value picks. I will tell you guys when an investment is not would not be profitable based on my models, and I would tell you when it would be. I'm trying to identify basically very profitable and prospectful companies for the future. So in order to not miss any of my future updates and to help me grow my channel and to help me form a community behind the channel, please hit the subscribe button. Thank you very much for doing so. And putting the context, is this the great reset that we see unfolding in front of our eyes? As you probably have heard, this was the terminology used by Katie Woods last year. Katie Woods is basically the owner of ARX Investments, an investment firm that has produced some very massive yields and very massive profits with its innovation funds in the last couple of years. Last year, the funds were not performing quite well, but I think even if I don't really agree with all the statements of Katie Woods, I think that she has foreseen this situation that is unfolding in front of our eyes very sharply and very precisely. So she introduced this terminology, great reset, and she referred to the fact when the Fed is going to start hiking the rates, how would that impact the stock market overall? And she said that a great reset is going to take place, meaning that the valuation of growth stocks are going to sink down to a lower basis. That would be the reset. And after that, the increasing trend, the increasing long-term trend is going to continue. And eventually, in my interpretation, what we see is basically the great reset of the growth stock, the great reset of the valuation of the growth stocks. And one of my investment analyst friend has basically put the situation very sharply in a couple of sentences. And I would like to use his quote because I think it's very useful and it really captures the essence of the situation. So what he said is, and I'm quoting word by word from him: "When I was a beginner investment analyst, my boss once told me that who likes math will deal with bonds. Who likes to dream will deal with stocks. There you can use your fantasy. Numbers are only secondary. The bigger the amount of money in the economy, the bigger investors can dream. The indicators of these dreams were the rally of the Tesla stock, the meme stocks, AMC short squeeze, GameStop, and the crazy rally of different coins. Now there is more and more evidence that instead of the dreams, reality comes to the forefront. What doesn't generate yield and only consists of dreams would be sold by investors, and what has real value would be bought." I think that this really nicely and really precisely captures what's going on with the market. And this is the context. And now let's take a quick look at Palantir, because that's why we are here today. Okay. So this is Palantir's charts, and I don't want to bore you guys with the details because many of you are who are interested in Palantir know the details already. That the stocks topped out at around 45 USD, and since then it has produced a disastrous performance. As you can see, we closed at 1454, and the RSI index, that is basically a momentum indicator and captures whether the stock is oversold or not, is signaling a heavily oversold position. It's around 23. Everything close to 20 means that the stock is heavily oversold, but that doesn't matter. Technical indicators doesn't matter because basically the macro context, the macro background is so strong at the moment and is so strongly driving the market that it doesn't matter if the technical indicators signal anything at this stage. And just to highlight what has been going on with this stock in the last couple of months, basically the performance last week minus 13%, guys. It's crazy, and this is just 1 week. But if you take a look at the 1 month performance, minus 23%, past quarter minus 40, past year minus 44. So yeah, it is just disastrous. And before looking into the valuation, just highlighting a few more things. Major problem with Palantir is that the stake owned by the institutions is very low still. So the majority of the shares is basically in the hands of the retail investors. Institutional owned part is only 32%, and around 70% is owned by retail investors. Retail investors tend to be more impacted by price movements, so that brings volatility in the price of the stock. Okay, so that's where we are. That's where we are. And now let's take a look at the valuations and let's examine if the 5 USD valuation can be realistic in any sense. So where are we with Palantir's valuation, guys? Where are we with Palantir's valuation? So Palantir is not generating any profits yet. So based on the earnings, we can't value the company. So companies are valued by two different methods. One of them is the valuation multiples. So with the valuation multiples, we are looking at different metrics of the company, basically, and trying to multiply them with suitable multiple, and then we are getting the fair share price. And another method is basically the free cash flow method. This method is trying to basically predict the cash flows, the amount of cash that will be generated by the company in the next 5 years, 10 years, 15 years, 20 years, and trying to discount them back to the future, and by as such getting the value for the shareholders, and in the end, by dividing that value by the number of shares, getting a fair share price. So let's take a look at the valuation metrics of the company. So price per earnings multiple cannot be used to value the company, as earnings are not positive at the moment, and this multiple can only be used if the company is profitable. So we can use two multiples in this case. One of them is the price per sales, because the sales of a company are always equal or larger than 0. And the other method is the price to book value. The price per sales ratio basically says how much investors are paying currently for 1 unit of revenue, for 1 unit of sales of the company. And the price to book value basically says how much investors are paying for 1 unit of asset of the company. Price to book ratio is not really used for technology companies because they have a lot of intangible assets. So price to book ratio is merely used to value financial institutions and banks. So I'm going to stick to the price to sales ratio. And as you can see, guys, even after the massive drop in Palantir's stock price, I must confess that the stock is still highly overvalued based on the price to sales ratio. Current price to sales ratio is basically 19.49, and the industry average is 3.9. So there's almost 400% difference between the industry average and Palantir's price to sales. This price to sales ratio is based on the trailing 12-month sales, and we are also calculating the forward-looking price to sales ratio that is taking into account the sales projected for the next financial years, but even that number is almost the same. So it's really high, is almost 20, and the difference between the sector average and Palantir is almost the same. So it's 400%. So that's a huge difference, and the difference itself is not it's not reasonable without interpreting basically the factors that are if the factors in the background are justifying this difference. And yes, it's for sure Palantir is growing at a higher rate than the sector, the entire sector itself. So let's take a look at the revenue growth rates. So currently Palantir is growing at 43% compared to the sector median of 16%. So there is a 158% difference there. So we can say that roughly Palantir is growing 3 times faster than the sector median. But I think that this itself doesn't justify this huge difference between the price to sales ratios. So the price to sales ratios is almost 4 times higher than the sector median, while the growth rate of the revenues is only 3 times higher. So yeah, that's where we are, and it's also important to take a look at the valuation at the multiples of the peers and just examine if the company's valuation seems stretched or the company's multiples seem stretched compared to the peers. And we can bring up a lot of examples. What I've seen after just looking into a couple of companies is that these multiples basically are moving in the range of 5 to 15. So I rarely seen anything above 15. So from this perspective, Palantir is highly overvalued. But let's take a few examples and let's see how they are valued currently. So this is Salesforce. I'm mainly taking software as a service companies. This is Salesforce. Salesforce price per sales ratio is 8.5. So way lower than Palantir's. Let's take another look at another peer. This is Alteryx. Alteryx price to sales ratio is 7. So we've seen two values around 7 and 8. Snowflake is basically a big data company, often compared to Palantir. Snowflake also has a rich valuation, and I think that this is the only example that has a higher price to sales ratio. So this is even crazier than Palantir. This is 82 price to sales ratio for Snowflake. But basically, Snowflake is well known for its super rich valuation, and a lot of critics say that this is not justified. So this is the only example that has a larger price to sales than Salesforce, than Palantir. And let's take a look at a major company, major tech company, to see how those are valued. Price to sales for Microsoft is basically currently it's almost 13. So also Microsoft is quite has a quite high price to sales multiple. So it's 13. So this is a major company. It's not growing as fast as Palantir, but it's already profitable on the other hand. So just taking a look at the growth metrics. So Microsoft, even if it's a major company, still has a revenue growth rate of 20%. So this is half of Palantir's revenue growth rate. So based on the growth dynamic, yes, Palantir might have 2 times as high price to sales as Microsoft, but on the other hand, Palantir is not yet profitable. So yeah, this is the main problem with Palantir currently, that even if the revenue growth rate is impressive, we don't really see the margins. We don't really see the profitability. And without profitability numbers, without seeing the margins, we can't really value the company. So we can just come up with assumptions, and we cannot take it for sure that without basically increasing losses, without burning cash, without increasing costs, the company is able to maintain its very dynamic growth rate. So what we can see from these multiples, the valuation of Palantir is still super stretched. Palantir is one of the most richly valued tech companies, despite the fact that it's not profitable yet, and we can see the margin numbers. We can see the margin numbers currently, and this is basically the main problem of this article. This is the main problem expressed in this article, that basically the growth rate is really skyrocketing. That's fine. So they just express this here. But they say that the growth rate may appear to be impressive, but it's backed up by the substance as Palantir has no profits. In fact, the company has staggering 5.3 billion accumulated deficit, demonstrating that Palantir has failed to create a business model capable of delivering sustainable profits over the last 2 decades. How many more years of losses are investors willing to accept before they can share in the company's profits? So this is the main concern of the article. I can totally empathize with this statement. I think that yes, for such a rich valuation, we need to see evidence of the profitability of the company. Well, that doesn't mean that the stock has to sink down necessarily to 5 USDs. And I tell you why. If we do a quick math, if we do a quick calculation, what would we see here? So if we assume a stock price of 5 USDs, and we take the current sales of the company and the number of shares outstanding, that would give us a price to sales ratio of 6.6. So if we assume that the fair intrinsic value of the stock of a Palantir stock is 5 USDs, we also assume that the company is valued with a price to sales ratio of 6.6, which is really close to the sector average, to the sector median. So we are assuming that a company that is basically growing with a skyrocketing growth rate of 40% annually, and this growth rate is assumed to be maintained for the next 5 years and even beyond that, we are basically just applying an average multiple to get the value of the company. I think this statement cannot hold true. This statement is false. Even if we don't see evidence of the profitability, what with these staggering growth rates and the tendency in the earnings of the company, because we can see basically a decreasing tendency of the losses, which is really promising. So with growth rates and with this tendency of decreasing losses, I think that it's absurd to suppose that that this high growth company that is basically riding on the back of some very important industry trends should be valued using the average multiples of the industry. I think this is just absurd. It doesn't make sense. It has to be valued with richer multiples than that. But I'm not saying that it's reasonable to value this company with the multiples, with the price to sales multiple of around 20. So if Microsoft, that is a major company, is valued with a multiple of 13, it's growing at 20% rate annually, and it's a massive profitable company, and it's not just the growth rate but also the basis from which it's growing. It's much higher. So 20% at Microsoft's basis, it's totally different sum of value than 20% at Palantir's basis. So if Microsoft is valued at 13, then I think Palantir's 20 is just too large. My main problem is that this stock is basically still priced for perfection. It doesn't really reflect the uncertainty around the margins, around the profitability of the company, and basically the company missing its trajectory for reaching profitability. This is not reflected there. So this dream is only built into this valuation that Palantir is going to be a high margin tech company, and we can believe in that, we can dream about that, but currently we don't see any evidence that this is going to be the case. I believe in that, and that's why Palantir is one of my high conviction stocks. And I don't really agree with any of the basically the reasons that are brought up in this article, which is said to be destroying shareholder value. So one of these is basically the fact that Palantir is not scalable. So this is brought up many times. Palantir is not scalable because they say that Palantir can only be introduced to new customers if a team, like a smaller team, is deployed to basically analyze the databases and the data sources of that company, and basically customize Palantir's platform on the needs of the customers. But eventually, this is nothing specific. So this is really the case for many software as a service companies. We can talk about Salesforce, CRM systems. So basically, Salesforce also has some consultants, basically, who are, when they are implementing project at the new customers, basically the smaller project team is basically configuring the software. Basically, it's analyzing it, or investigating the customer's needs to get the most out of the platform. We can talk about SAP. So there are a lot of SAP analysts who are doing the same thing. We can also talk about the platform specific to in the financial industry. For instance, if we are talking about SimCorp Dimension, if we are talking about Aladdin, all of these software. So the introduction of these platforms is always an entire project for new customers. Always like a separate unit is deployed, consisting of project manager, consisting of business analyst consultants, basically to support the introduction of the platform to the new customers. So this is nothing specific. And if we are talking about multi-year deals here, probably generating multiple hundreds of millions of profit to Palantir. So if the cost of basically getting a customer who is generating multiple hundreds of million dollars profit for Palantir, this is the cost of it is that you have to deploy a smaller project team who will support the setup of the platform at this customer. I think it totally pays off. So I don't see this as an objection. And the other very important objection is around shareholder dilution. Guys, shareholder dilution is just not black and white. It's just not 0 or 1. It's not a binary. It's not a binary thing. The main question is always around the fact that how much shareholder value does the company create with dilution? So yes, basically the stake can increase, and your ownership of the company can decrease. But if paying the employees with stocks creates more added value, so for instance, if they can get the best employees in the industry and they can create some massive shareholder value by doing so, because they attract the top talent, then basically the created shareholder value offsets the dilution. And I think that this is the case. So this company has to compete with Google's, it has to compete with Alpha, it has to compete with Facebook, it has to compete with Microsoft. And if they are not compensating their employees well, then they are not able to basically attract the top talent. And guys, we can just take a look at the salary of Palantir at Glassdoor. First of all, the company is valued at 4 stars. This is not a frequent thing with companies, because all companies have a lot of haters, and I'm usually seeing like ratings much lower than this one. But if you take a look at the salaries, then the base average pay at Palantir is 146,000 USDs per year. This is just the average. So there's a huge interval, as you can see. The top part of the range goes up to 243,000 USDs per year. And there's a comparison with other top tech companies, and you can say that Palantir is paying above these. Palantir is paying above Microsoft. Palantir is paying the same as Google, and it's a little bit below Facebook, but still around that one. So this company is really getting competitive edge, and it's really able to attract top talent. And by such, I assume that it's basically creating massive shareholder value on the long term. So guys, I think that I don't see that sinking down to 5 USD is a realistic scenario for Palantir. I really think that given the current macroeconomic background, basically the multiples need to shrink a little bit more. I would say that a multiple around 15 would be more realistic to Palantir. And yes, Microsoft is also sinking down. So currently it's 13 for price per sales for Microsoft, but it's also sinking. So I think I would feel more comfortable with a price to sales multiple for Palantir at around 15, and that would imply a stock price something around 10, 11 USDs. So that's for sure that there's room for sinking lower for Palantir. But on the long term, and this is important, so let's not get short-sighted. On the long term, Palantir has massive potential to grow. There are multiple contracts in the commercial segment that are basically popping up recently. So the use cases are there. Without going into details, some of the contracts, Palantir and Hyundai Heavy Industries are forming a joint venture to commercialize big data solution. Palantir and DuPont Therapeutics announced a partnership when DuPont will deploy Palantir's Foundry platform to help power DuPont's efforts to discover treatments and cures for the most challenging diseases. And also the Merck company is basically teaming up with Palantir to provide a collaborative data analytics platform for the semiconductor industry. 3 very important use cases, and I think this is just the beginning. So I really don't think that Palantir should be valued with the average sector price to sales ratio, because basically the headwinds of the company, sorry, the tailwinds of the company are very strong currently. It's riding on the back of some very strong waves, some very important industry trends. So I think that even though the multiples need to shrink a little bit for the buyers to feel comfortable to enter this stock on the long term, this company has some good growth prospects, and in the long term, I mean 5 to 10 years. So for traders, forget Palantir. For long-term investors, stay comfortable, because in 5 to 10 years, this company is going way beyond where we imagine that it is going to be right now. So guys, this is what I wanted to say about Palantir. I think that the $5 price target for Palantir, it's a myth. It's not realistic. We are not going to get there. We are going to probably go slower, but not to 5 USD. So stay calm, stay invested. Thanks for watching my video. Please smash the subscribe button, because I'm coming with interesting updates based on real analysis. Thank you very much for watching, and see you soon in another one. Cheers. Bye. Bye.